It's Quant Trade Edge, and today I wanted to look at a few examples of a simple ABC pattern. There were 4 of them that I saw today, and I traded 3 of them. So I just wanted to point that out, and this is actually one of the easiest, I would say, and most reliable things to trade out there. So it's a good place to start if you're a beginner. Also, if you ever just need to get back on rhythm, we all have those periods where you feel like nothing's hitting. This is kind of a simple bread and butter trade that can get you back on your winning streaks. So an ABC is a 2-wave or 3-wave pullback in a against the trend. So, sometimes I think when I explain it on the video, I don't make that clear. And I've had people trying to find ABCs in the direction of a trend, and that's not what they're for. They are, it stems from Elliott wave, where you have 5 waves in the direction of the trend, 3 waves, counter to the trend. So here is a chart of the Russell 2000. This was the open today. In fact, we could just look at the pit session to make it cleaner. So this is where we opened, and we immediately went down, and we recovered and kind of went sideways for a little bit, and then had this big impulse up until this point. And from that point on, remember, this is where the Gann bar counting comes in, and I can put the Gann bars up there just to make it objective. But basically, the up wave ended here, and this is your first wave down. I'll make this really big so you can see the microstructure here. This is wave 1, wave 2, wave 3. And what you essentially do with wave 3, unfortunately this was a very big outside bar. You could buy stop above there. You could see that it triggered and buy on this pullback, or buy one lot on the breakout, add on this pullback, however you want to manage it. But the pattern is this ABC, and the fact that it's coming into the 20 period exponential moving average, that's a bonus that it's coming into a support level. And my go-to target for these patterns is the 1.272 extension. So you drag a Fibonacci from here to here, and the 1.272 is up here. So in theory, if you bought this, call it 2401, you got out at 2407 and change. So this was good for 6-ish points, which, when the bar is 4 points, that's not so great, 1.5 to 1. Ideally, you would like to have a very small trigger bar. If you were able to buy on this and cut that risk in half, then it made it more decent. But that's something I also look at, since I have a target in mind. I look at the entry bar to see if I could get the kind of reward to risk that I want. If not, I would wait for a pullback, and risk missing the trade. So this was an example on the Russell. There was also an example in gold earlier in the morning. Let's see if I can find it. What time would it have been? There we go. I think, yeah, this was it because of this spike here. So this peak came at 8:55 a.m. So this is clearly in an uptrend. So we're, all the while you're in this uptrend, every single one of these bars made a higher high. And you're sitting there wondering, when can I get in? Well, once that had exhausted itself at 9 o'clock, we got a very clean 2 waves down. So There's your first wave. That's not looking like what I saw, except that this is correct. 1, 2. Yes, okay, so this did not make a lower low. This low is 11.6. This low is 11.8. So this and this are really just minor within. And then this is your whole thing lower. So really 1 wave, 2 waves, and then, I guess you could really just draw that together because you didn't create new extremes, below or above. And in doing that, here we had a very tight risk bar. And, be careful what you wish for, because with these tight risk bars, you can get great multiples of return on your risk. But I've also noticed that there's no free lunch in the market. When you get a really nice setup bar like that, you sometimes have one of these, which this doesn't affect the count because it's outside. But obviously, if you had your stop 1 tick below there, that potentially could have stopped you. And I say potentially because based on this chart, it looks like it would have stopped you. But I've been in plenty of these situations myself where the stop is actually in. I see this kind of a print come up and I didn't get stopped. So I don't know if it's either a false print or needs to trade more than a certain number of contracts at that spot for it to be considered valid to stop an order, whatever it may be. But in this situation, I had a stop. I think it was 8.6 or maybe it was 8.8. It was definitely a few ticks below this low. So that sort of helped, just dumb luck, helped protect me there. But again, going for a 1.272, we got there pretty quickly. And I think it even kept going after that. Yeah, I guess this is picked up again after the official close. And this thing also works on stocks. So Tesla, if you look at the daily on Tesla, I'll take these off, they're starting to annoy me. The daily on Tesla, is kind of trending up and it's very overbought. And to me, when I say overbought, I very specifically mean the 2-period RSI is above 95. So here we've had 3 consecutive closes above 95. And, the trend is clearly up. This morning, from the open, the trend was clearly up. And it stopped going up at 9.05. And then you got a very clean A. And remember, this is all a hoagie, but you did get right below the hoagie there. Up, down. This again, that's an outside bar. And this was your risk bar. And, again, we have the 20-period moving average, exponential moving average there, which is also very helpful. And in this situation, we didn't quite get to the 1.272. We got a full retest. We went above, made new highs, and then went sideways for a while, made new highs again, and got rejected. So this tells me 2 things. One is, we're already overbought. We're on the 3rd day of the 2-period RSI being over 95. And then we have this big run up, and then it's losing steam. It's basically losing steam here. And this is also kind of a flat flag here. If you look at this final flag, it's kind of flat, breaks out and fails immediately. And we know that is actually a pattern to start a big down move. And the other thing that if you can't, if this doesn't want to keep going higher, you got to look for what's its potential to go lower. And the final wave to the upside is this right here. So this wave down was bigger than the last wave up. And then we had this bar here. And when you take out that low below 401.88, that is officially a 5-minute U-turn. So we got the U-turn, went up here and kind of went sideways. I got rid of the last of my Tesla longs, and I even put on some short-term put options just to see what this does tomorrow. Well, I was actually expecting it to give more today, and it didn't. But the structure is there. The 5-minute structure is broken, and we did have what seems like a flat flag. I mean, typically they're not as long as this, but it's still the same concept. So we'll see if there's more follow through on the downside in Tesla. And the other one that I saw today, and just to also show you, it doesn't have to only be to the long side. It's just whichever way your trend is. So this is Marvell, which bigger picture on the daily, it had a massive gap. And it was really just coming into the 8-period simple move, exponential moving average. Okay, but on a 5-minute basis, this has been in a pretty firm downtrend. And again, today we opened here, but then kind of went down. So this last move up here was a pretty clean ABC, and here this is an outside up here, down. Now all of this is a hoagie, right? All of this stuff is inside here, so we don't worry about the wiggles within it. And that's our two waves. And in this case, you had an inside bar also, and that's your trigger bar. So 106.88 ended up going all the way down to 105. So almost it was $1.88, and this was a 23-cent risk. So that's the kind of stuff we're looking for. And if we do the extension on it, you'll see we got to the 1.272. Bigger picture, was looking for this to bounce off of the 8 exponential moving average. And, as you can imagine, when we had that consolidation, we hadn't, it didn't touch the 8 on the daily until we got down here. So I was looking for it to touch there and then close above this low, 106.33, because closing below the low of that is pretty weak. And my hypothesis here is that we just want to tag support, bounce, and then we're going to start going higher. And the volume's also a helpful thing to look at to judge that. So this was a higher volume day. This was a lower volume day. Yeah, it's showing a downward trend, but it's not as clean as I would like. So anyway, that's why I had a line drawn here for myself to watch it. I wanted to make sure it closed above there, and it wasn't until the last 5-minute bar that big buying came in. This big volume here, 2.4 million shares. Good Lord. I don't know if it traded that all the rest of the day. I mean, the total volume on the day was 13. Okay, I guess it does trade quite a bit. But again, this was a very clean ABC, small risk bar, big return. Then it wasn't until that last 5-minute bar that it squeezed back up, so that, this whole thing here is kind of, a trap beneath here. If you look at something like a 30-minute chart, you'll see how this is a final flag, breakdown, failure. So anyway, that's just the power of the ABC. Very What makes it so strong is that you already know your market's in a strong trend, whether it be a downtrend or an uptrend. So then you just have to be patient to wait for it to form. And the only trap I would say to look out for is don't look for an ABC in a market that has climaxed. Like for example, this is copper right now. It had this spike, left a big tail, came off. You can look at a 15-minute. This is more of a climactic move. So I wouldn't look for an ABC here to want to buy. You want to buy on the front side of the move, meaning, on this side. Once you've climaxed, you're kind of in a downward move. So that's the one caution I would have with this pattern. But other than that, it's actually a pretty simple and robust pattern to work with. So anyway, these are the types of things we do in our Discord. We have members who have programmed the GAN bar counting into TradingView, so that is available in TradingView. And I'll put a link to the Discord in the description.